Hi, Todd VanDenburg here with VanDenburg Capital Management and another Uncommon Sense update. So we've been out of touch for about a week as we were hosting our State of the Market updates here in Santa Rosa last week. As everybody saw, a couple of weeks ago we had a bit of a market correction, and last week we had a nice week in the market, so we pulled back some of that correction. We're still down about 6%. And as much as I'm not a technical trader and I don't do investing based upon trends, the market had been going up so straight line for so long that a little bit of a correction just had to happen. You get 100 sunny days in a row, you're bound to get some rain. And so we're not too worried about it. There's nothing fundamentally wrong with the economy that warrants any sort of a reason to be worried about the stock market or equities or publicly traded companies or corporate profits or wages or anything like that. But at the event last week, we did have quite a few questions about something that, frankly, I didn't really cover in the presentation too much, and that is, what happens if our national debt continues to rise at the rate that it's been rising? Now, when President Obama took office, we had about $9 trillion in total national debt, and today we have about $21 trillion. And so, yes, our debt is going up quite a bit. But really the question people need to ask themselves is, can we afford that debt? And the way you know if you can afford your debt is, can you afford the interest payments? And when the principal comes due, can you afford to pay it back? So let's talk about interest, because it is the one thing that can blow up our budget. The federal government brings in a finite amount of money every year, and if the interest on our debt rises out of control, that interest can consume our federal revenue, and then we have to make a bunch of tough choices. Do we spend money on the military or Social Security, which is supposed to be a trust fund, or a whole host of other things? So here's why we're not too concerned about it right now. When President Obama took office, as I mentioned, about $9 trillion in debt. We paid about $400 billion a year in interest on that debt. And today we have about $21 trillion, and we pay about the same amount of money every year in interest on our debt, meaning we've doubled the amount of debt we have and our interest payments haven't gone up. And here's why. Back when President Obama took office, the average interest rate that we were paying on that debt was about 6.2%. And if you think about it, that sort of makes sense, because we were basically paying the interest on the bonds the government had issued back in the 80s and late 80s, early 90s, when interest rates were significantly higher than they are today. So when you look at the average interest rate that we're paying on our debt right now, it's a little over 2%. So we pay about a third the interest rate on our debt that we used to pay back when President Obama took office. So while our national debt at $21 trillion is not something that is a good sign for the long-term prospects for our country, we're not in any immediate jeopardy because of the interest. And as long as we make our interest payments, which we can easily afford to do, we're not in jeopardy of the dreaded default or any other sort of fiscal crisis that comes along with it. So it's important that people think about, as they hear in the media, the tax bill that the Republicans passed at the end of the year is going to blow a hole in our debt and our deficit. And then this new spending bill that they just passed a few weeks ago, that's going to blow a hole in the debt and the deficit. And while fiscal discipline in Washington seems to be in short supply, right now it's not of immediate concern, because we can more than afford to pay the interest on our debt. And as we ask people to, allow us to borrow more money, they're perfectly happy to do it at today's low interest rates. So again, while we're not in love with the fact that our debt continues to go up, and $21 trillion is an enormous amount of money to have to repay, it's not something that we're overly concerned about right now. We don't think you should be overly concerned about it either. But that doesn't mean that we shouldn't hold our elected officials accountable and make them try to put some fiscal discipline in place, so that as interest rates start to rise, we're in a place where we're not worried so much about that interest payment that we have to make every year on our debt. So that's a pretty long explanation about interest rates, but the question came up several times, and I just wanted to make sure everybody heard my answer. So that was your update. I hope you enjoyed it. If you did, give us a like, give us a share. We certainly appreciate it. And we'll be back in a couple of days with another Uncommon Sense update. Thanks for watching.